Are you a real estate syndicator or professional who is looking to grow your business in 2023? Are you tired of attending networking meetup after meetup and thinking that there has to be a better way? Have you ever thought about podcast guesting? According to Statista, podcasts are going to reach over 100 million listeners by 2024. Podcast guesting allows you to tap into that network of listeners. At Podcasting You, they have worked with hundreds of investors to secure guest placements on thousands of podcasts so they can raise more capital, generate brand awareness, and increase their credibility. If you're interested in learning how podcast guesting can help grow your real estate business in 2023, go to podcastingyou.com/syndication to book your free discovery call. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we have packed a few different shows together that we call highlights to help you to get the most bang for your time in educating you on the topics that you want to learn from. We would love to hear from you. I am grateful that you are with us today. Have a blessed day. Our guest is Chris Odegard. Chris, welcome to the show. I know you have some skill sets that are going to help many of our listeners and passive investors who may be kind of stuck in a rut and maybe some money that, hey, they could be doing some other things with that they have not thought about. And so I'm looking forward to getting into that and really pulling some of that expertise out of you so, man, they can have a better understanding about that. But first, I want to learn a little more about you. Where are you from and how did you get into this business?
Sure. Well, thanks for having me on the show, Whitney. Happy to be here and share what I can. Well, I'm originally from Cincinnati, Ohio. Went to school in Daytona Beach, Florida. Worked for the Boeing Company for a few years being an understatement, out in Seattle, Washington. But today I'm the prolific investor. But I wasn't always the prolific investor. Like a lot of Americans and other people, I was a conventional investor for a long, long time, investing for my financial freedom and retirement with mutual funds for a 401k. And that is a slow path to mediocrity. And, that point was so far away, you needed a telescope just to see it. And then I had what I finally referred to as, I was on that path for quite a few decades. And I had what I finally referred to as my illiquidity event in 2009, where I lost 55% of my assets and thousands of dollars a month. And that was the end of my 19-year marriage. And all of a sudden that path to mediocrity got exponentially worse. And, at 45 years old, I was looking, okay, well, how am I ever going to get there? Or am I just going to work for the man forever? And then a friend of mine, coincidentally, around the same time, and of course, that was the bank failures and the real estate market. So that all was just kind of on top of that. But coincidentally, around the same time, a friend of mine said, "Hey, Chris, you should get this book and read it." And so I bought this book and I dutifully set it on my nightstand, and it sat there for longer than I care to admit. And then I was on a business trip and I said, I'm going to read that book. And of course, the book was Rich Dad, Poor Dad by Robert Kiyosaki. And that just turned my world upside down. And, I started moving in that direction and alternatives I wouldn't say as fast as I could, as fast as I comfortably could. And 9 short years later, I was looking back on everything and it was like, wow, I had made up all of that 55% and multiplied it many times over. And that would not have happened with mutual funds through a 401k. So that's when I started the prolificinvestor.net and started sharing my experience with everyone, hoping to move people, from conventional investments over to alternatives in some way, shape, or form.
Nice. No, that's incredible. And I just appreciate you being willing to share, right? I mean, some hard times, right? Just how you thought then to how that changed to how you're thinking now and helping others do the same thing. And let's jump right in. So, what are you doing different now versus what you were doing then? You talk about conventional versus prolific. Let's dive into that.
Well, I was 100% conventional investments back then. Now I'm 95% alternatives.
For the listener that may be kind of new to that, or maybe they're thinking, they may be in a conventional type investment, but not really realize that that's what it's considered or that there's some kind of alternative.
Yeah. So everything that's publicly traded, stocks, bonds, and mutual funds, those are conventional investments. Everything else is alternatives. So, your stocks, bonds, and mutual funds, CDs, things like that. And then you start looking at conventional alternatives, that's everything else. And that would be things like notes, every segment of real estate, where it be single family or apartments or commercial, cryptocurrency, precious metals, investing in business equipment like ATMs or, earth moving equipment, the energy sector, natural gas, oil, coal, stuff like that. And, being a shareholder of a business, but private shares, not public shares. And believe it or not, cash value life insurance is something that should be part of everybody's portfolio. And of course, what you do, being a syndicator and raising money and put deals together, those are all alternatives. And it's funny when when the conventional investor goes to a financial planner and they build them a diversified portfolio of stocks, bonds, and mutual funds, they're in about this. It's not diversified at all. They're only in the paper asset class and they don't have any of the other good stuff.
Yeah, no, I appreciate just you elaborating, right? What is considered conventional versus everything else? I just think it's great to even help us to think outside that box a little bit. Often we're raised to just think about the conventional ways. I know I was, and most of our family, it's like, well, that's just what you do. Right. I mean, you're not even exposed until you read that book, Rich Dad Poor Dad.
Right.
You just aren't thinking that way. You can't see outside this box. And so let's help the listener think outside that box a little bit. Right. But it can seem very complicated. It can seem a little scary, right? Because maybe that's not what we've been exposed to. And the more I've learned, I would say it's the complete opposite. I'm scared to invest in those conventional ways now.
Exactly. Yeah.
But dive into that a little bit and let's help the listener think through maybe what they have in the conventional ways that, hey, they could be, using in a different way.
Well, sure. You mean talking about some of the investments themselves, or what are the advantages, disadvantages?
Yeah, just helping to think through alternative versus conventional and how they even move from conventional to alternative investments.
Some people become alternative investors by accident. An example that I would use is they're starting a young family. They get that first starter home. They get over the home, get the down payment, buy the house, and then a handful of years goes by and the family is bigger. They've outgrown that house. They move up to the next one. And some people sell the first one, but some people just kind of go, oh, why don't we keep that first house and buy the second one? We'll rent the first one out, and boom, they're an alternative investor and they get all the benefits. Better returns, built-in tax efficiency, the ability to insure your asset, the ability to use leverage against it. All of a sudden, with one little investment, they're an alternative investor and they're getting a ton of investments. So if we can show people how superior alternatives are, maybe they can make a purposeful move in that direction and see what they're missing out on.
Yeah, no doubt about it. And just thinking outside that box, like you're talking about. And making that shift. So, tell us a little bit about, maybe there's some examples of folks that you've worked with recently or that you're helping. They were in this, conventional, but now they're doing some alternatives. How do they do that? Maybe a 401k, somebody has a 401k, but they've not thought about being able to use that. How do they do that?
Right. Well, I'll use myself, and then I've translated this to other people. I was part of a networking mastermind with alternative investments quite a few years back. And, like a lot of conventional investments, I had a ton of money sitting in a 401k, and it's not the government. The government says you can invest your 401k and IRA money in almost anything. There's only about 3 or 4 things that you can invest in. It's the administrators of those plans that lock you into stocks, bonds, and mutual funds. So I've been working at the Boeing company for a couple decades and was making this shift. And of course, I had this capital locked up here, which I thought I couldn't use. And the guy who was in this mastermind group said, Chris, ask your employer if you can do an in-service transfer. And I said, what's an in-service transfer? He said, well, that's where you're younger than 55 and you're still working, you're still employed, and they will let you move some of your money out of their 401k into another plan. And then you can put it into a self-directed 401k and invest in real estate or notes or whatever you want. And I kind of laughed and probably rolled my eyes, because here's my thinking. Look, I've been working here for decades. If this were possible, certainly I would have heard about it before. Well, I was completely wrong. And so the company allowed me to take their entire company match out. And after a couple of decades, that was not an insignificant amount of money. And that helped jumpstart me in that. And then a couple other friends that I talked to, did the same thing. But I've been working there for decades. This is just kind of like hidden right there out in the open. All you had to do was ask the question, but you'd have to know that. So that's one example. And that's kind of one of those things where I've learned, the old saying, if something seems too good to be true, it's probably not true. Well, I go the other way. When you hear something like that, I go, man, what if that is true? And I run toward that stuff instead of run away from it.
Yeah. And I think it's interesting, like you said, all you had to do is ask the question, but oftentimes you don't know what you don't know, and it's hard to even know the question to ask, right?
Yeah.
And that's what we're hoping, obviously, to expose the listeners to as well today. Maybe speak to some pros and cons there that you've learned after making that switch, or what pros and cons have you learned from, just and even others that you're working with.
So I compare conventional and alternatives across 13 categories, and alternatives win on 11 of the 13. So I'll go through the couple of ones that I think are really interesting. Is that people wouldn't think of buying a house and then not getting insurance for the house. And as a conventional investor, you spend a lifetime pouring money into stocks, bonds, and mutual funds in your 401k, and you have no ability to insure it. If you buy a single family rental, you go to your insurance broker and say, hey, I'd like to insure this asset against loss, this really expensive thing. And they will do it. Matter of fact, if you use leverage to buy that property, the bank will require you to have insurance. Now you think you've put way more money into your 401k than you ever put down on a house, and it's completely unprotected from anything. And I go, well, insurance companies are pretty good about looking at risk. What is it that portfolio is so risky that they won't insure it? And another example is leverage. If I want to go and buy a small apartment building, I can go and say, hey, will you loan me a $400,000 to buy this $500,000 apartment building? And as long as me and the asset and everything lines up, they'll say yes. If I go to a banker and say, hey, I'd like to borrow $400,000 to buy a $500,000 portfolio of stock, bonds, and mutual funds, after they get done laughing, what is it that bankers look at this supposed asset and say, there's no way I will lend against that? Now, conventional investors will argue with me about trading on margin, but they didn't acquire that portfolio by borrowing it. Basically, the margin trading is kind of a line of credit after they've already acquired the asset. So I think those two things are really interesting. And then just one more, the S&P 500 index is kind of the benchmark or one of them, of the overall stock market. Well, historically, since its inception, the S&P 500 average annual return has been about 9.8%. But studies have been done about how much does the average equity investor make in the stock market, and it's a little bit more than 5% before taxes and inflation. So talk about being on a mediocre, on a slow path to mediocrity. If you're only making 5% before, inflation and taxes, you're probably not even maintaining buying power in your conventional portfolio. And in the alternative world, 15 to 30% returns are just commonplace for us. And some people's minds just explode when you talk about numbers like that.
No doubt about it. No, that's awesome. That list of pros and cons there is just great for, I just think, the operators and the passive investors that are listening to know, just as we speak to investors, right? It's great to know those things so we can help explain it. But how would you explain that? Let's say, as the operator, I take many investor calls, right? Every week, just talk to so many investors, and people on our team do as well. But I want them to better understand how to explain that to someone who's brand new to this, right? So we're speaking to that investor, and they're like, 401k, sure, I've got one, but I don't know I could do anything like that. What are some things that we need to be prepared for, or to be able to explain? Maybe we've talked about them a little bit, but I just think, how do we answer that question?
So you're trying to basically take mostly conventional investors and ease their fears about moving into your syndications. Well, before the call, we were talking about my superpower, and I call it making complicated things easy. So I've created something called the hierarchy of investors. And it came to me when I started my blog in 2018, and people were saying, well, Chris, what are you trying to do? And I said, well, I'm trying to take people from the bottom and move them up to the top. And what I thought about was Maslow's hierarchy of needs, where you start out at physiological and safety, and then eventually you get to self-actualization. Well, the hierarchy of investors, in the shadow of this pyramid, you have, and I call it in the shadow, in the dark, you have the conventional investors. They're not even on the pyramid, right? And then you get on the pyramid, and then on the pyramid, then you've got the notes and the real estate, and all that stuff is on there. And then off to the side, I've got these 13 categories showing where the advantages are. And this might be a tool. Like I said, it's a picture, it's on one page. It might be a helpful tool to show them all the advantages of what you're trying to get them. Well, you want them to move in that. Obviously, it's good for you, but everybody wants to make money at this. And so that's something that might be helpful.
Your guest is MC Laubscher. He's an educator, and his passion is to share how investors and business owners can create, recover, warehouse, and multiply cash flow through advanced cash flow strategies. Having figured out how to escape the rat race and replace his income through cash flow investing, he shares how you can do the same through cash flow investing strategies. MC is the founder of Cashflow Ninja and the creator and host of the top-rated business and investing podcast, Cashflow Ninja and Cashflow Investing Secrets. MC, I've known MC for a few years now. It's been incredible to see what he's done in our space and how he's helping others think about cash flow strategies, right? And so now he's written a book, the 21 Best Cash Flow Niches book, and he elaborates on 3 of those niches today that we don't talk about often, that maybe you should consider adding to your portfolio. But I know you're going to learn a lot and enjoy the show today. MC, welcome back to the show. I know you and I have crossed paths at a few conferences or speaking here and there, and haven't got to catch up much lately, but I've enjoyed the last just few minutes, actually, just hearing more about what you've been up to and some success you've been having and some things you've accomplished. It's incredible. And one thing recently, I know we're going to jump into today, but before we do, give us in case the listener hasn't heard of you before, tell them more about your focus, your business model, strategy a little bit, and kind of how you got to where you're at right now. And let's dive in.
Absolutely. Thank you so much for having me on. This is a blast to connect again, my friend. Great to see you, and congrats on all of your success too. For listeners, that just a little bit about me. So my name is MC Laubscher. So I'm a investor, entrepreneur. I have several businesses, but most people are probably familiar with my platform called the Cashflow Ninja, and have heard of me through that platform. It's I've kind of took some crazy colors and throw it together and got a crazy little ninja. And at the Cashflow Ninja, it started out as a podcast about 5.5, almost 6 years ago. And it's grown into an educational company. I'm very mission-driven and purpose-driven through the Cashflow Ninja to help as many people as possible to become self-reliant through actionable education. So we share a lot of different strategies on there, mostly cash flow strategies. And we help people we assist them and share information to empower them to escape the rat race through cash flow investing strategies. So that's one of the businesses and one of the platforms that folks might have heard or have seen me on. And then I am invested in several other businesses. So I also have a company called Producers Wealth, where we consult virtually with clients all over the United States, and we help them implement and execute banking strategies and help them set up their own banking system in 30 days or less. And then we also have another company called Producers Capital Partners, where we actually assist folks in investing in cash flow investments, such as multifamily, such as resorts and other investments and so forth. So that's a little bit about me, and that's what I've been up to. We've been keeping busy.
Yeah, sure. No doubt about it. It's been incredible to see your growth just over the last few years, and more and more people that you are helping. I think through what you call it, what I love how you call it, cash flow strategies, right? We should be strategizing about different, methods of cash flow, right? And how to do that best. And it's incredible to have somebody like yourself that's researching and educating and thinking about all these things all the time. Often, many of us are you're a passive investor. You don't have time to just drive in and educate yourself about every one of these strategies. And thankfully, MC has just recently written a book as well. And we're going to dive into that today. But the 21 Best Cash Flow Niches book. And so I encourage you to look that up for sure. He held up, maybe you can hold it up, MC.
Oh, absolutely. Here we go.
So we can see it. It's got those amazing colors on it again. It's great. But we're going to dive into a few of those niches today, but something other than, single family, multifamily, which we talk about often. MC has really become very educated about many different niches, and now he's helping many others to help do that as well. But MC, let's dive into a few other niches today that we wouldn't normally discuss that you have seen to be so helpful to other passive investors.
Yeah, absolutely. And this has been a lot of fun because I've mentioned, I started my podcast Cashflow Ninja 5.5, 6 years ago almost. And it's just been incredible to have been able to interview the best minds in business and investing. And the show's pretty wide, meaning we cover a very wide variety of topics. So we've talked about businesses, we've talked about real estate, we've talked about commodities, we've talked about paper assets, we've talked about crypto and blockchain assets. We actually started covering that in 2016, if you believe it or not. So we've been looking at all these different types of opportunities and investments from the best minds in business and investing. And the number one question that I get when people talk to me is, MC, you've had over 700 people on your show for almost 6 years now. Like, what are some of the best opportunities that have been shared on your show? So it's a pretty good exercise. We continue to produce content so much that sometimes you forget about everything that you've shared or covered on your show. So it was actually a fun exercise writing the book, because I eventually said, you know what? I've been getting this question over and over and over. I'm going to put it all together in a book for folks and just share the 21 best cash flow niches. And of course, I throw in 5 bonus niches there, because to narrow it down to 2021, it was hard. To narrow it down to 26 was hard. And of course, for your listeners and viewers, marketing 21 is better than marketing 26. I don't know why it is that way. It's like when you look at numbers 5, 7, 10, 20, 21, and then anything above that, it's hard to market. But the 21,
it's like 100, right?
Yeah, there you go. You almost have to go the next one that seems like, 100 this is 100. So, but yeah, it was a lot of fun putting it together and breaking it down and trying to just dive into 21 of these niches, and of course the 5 bonus niches. But some of the ones that I think that would be very interesting for your listeners and for your viewers, because there's a lot of real estate investors listening to your show, is one thing that I found quite incredible was agriculture investing and agricultural niches specifically. And it was very intriguing. And I listened to a couple of those shows again, because I'm like, this is very intriguing, because you could, of course, buy farmland, buy farms. You could look at, folks have shared on my show how to invest as a syndicator in the farming business and livestock and so forth, and certain crops. And then there's also folks that have shared how to invest into coffee parcels, where coffee beans are being produced, and also cacao. And this is also offshore too, which adds a different element to it. So now it's not just agriculture, it's offshore agriculture, which gives you a little bit of a diversification. But one, I would say, area within agriculture that was covered on my show, which was very intriguing, was actually timber, and specifically teak. And this intrigued me. So I looked into it. And then I discovered, as I'm doing my research and learning more about it, that teak has been included in a lot of university endowments like Harvard, Princeton, Yale. It's held by a lot of hedge funds. There's folks like Ted Turner that owns, thousands of acres of teak, specifically trees and agriculture. And I thought this was very interesting. And then I looked at this and I said, why? That's usually how my thinking process works, is I look at what very wealthy and successful people are doing. And then I look at this and I go, but why are they doing this? Well, it's, of course, very interesting as an investor to look at this, that it's teak trees. 5 years ago, they just grew. 10 years ago, they just grew. 15 years from now, they just grow. And 20 years from now, they're still going to grow. So, and of course, it's not a get rich quick scheme by any means, right? It brings an investing approach as an investor of this very long range, long view, generational approach. So then when I looked at it like that, and I said, well, this is then not surprising at all why family offices love this and endowments love this. And all these very, very wealthy investors and families have invested in teak because they have a long-term vision and view. They think multi-generationally, not just while they're alive, right? They see themselves as just stewards of the family capital. That money managers and endowments and hedge funds kind of see themselves as well. So that was interesting for me to look at that. And then the other thing that really popped out to me when I looked at this is it provides great balance in a portfolio. So if you're an investor and you're kind of spread across a couple of asset classes like businesses, and maybe you have a lot of real estate investments and so forth, this is a really good recession-proof just niche because it provides that balance. Real estate goes up, down, and sideways. Businesses can go up, down, and sideways, and just in different types of environments, whether it's inflationary, whether it's deflationary, the trees just grow.
They keep
just
growing
grow.
up, right?
And they're there, and they'll continue to grow. So I found that was fascinating in agriculture, and there's so many different niches in it, but specifically that teak one. And obviously I go into depth into a book and in the book about it, but I thought that one was fascinating.
That is fascinating. I remember I've had a few people on our show as well that talk about syndicating livestock and land and crops and trees, things you're talking about, and even offshore. And I didn't have a clue at first. I was like, oh, I didn't even thought of this, and it seems like there's more people doing it than you think, but it's just one of those things. If you're not exposed to it, you just don't see it, and then now it's like, like you mentioned, there's farmland, there's livestock, crops, coffee, timber, all these different things, and could be just an amazing steady investment. And even offshore, like you're talking about, so many different dynamics to it that you could add to your portfolio.
There's quite a number that I've invested in. And the reason why I've been able to do that, because folks usually say, well, shouldn't you just pick one and focus? My lane and my focus has been people, finding the greatest people in different niches, learn and study everything that I can, and immerse myself into a space before I invest my money there. So yeah, there's quite a number. The crypto space, I've been an investor in, and over the past 20 months, I would say 12 of those, I've been so immersed in it to learn more and study more, because I believe there's a huge opportunity there. I look at the California gold rush strategy, where during the California gold rush, it wasn't necessarily the people that came there and dug or panned or tried to mine gold. It was actually a lot of the entrepreneurs and business owners that sold equipment, picks and shovels and clothes and shoes like Levi Strauss, and housing and food and financial services like Wells Fargo, right? And the Wells family. Those folks all came out of the California gold rush. The same opportunity exists there. So that's one that I'm investing in. Another one that I think what might be interesting for real estate folks is in the hospitality industry, which is one of the niches, actually, believe it or not. Most folks would go, are you kidding me? Hospitality right now? Yeah, it's getting absolutely slaughtered. And I don't necessarily, with my paradigm and worldview, I don't necessarily think it's coming back either, because I don't think business travel is going to resume as it was prior to 2020, which is a huge part of hospitality, conferences, business meetings, and so forth. I think the world's kind of adapted to the Zoom world, right? And doing Zoom conferences. But there are niches within hospitality. The short-term luxury rental space is on fire like I haven't seen. And I think it's only getting started. Folks have changed their habits. They've changed how they travel. They changed how they vacation. They would drive somewhere 3 to 4 hours, or maybe even up to 6 hours from where they live and vacation there, rather than getting on a plane and going somewhere. And it's the same thing, another niche within the hospitality industry that I'm a partner and investor in that I've thoroughly enjoyed is historic resorts close to major markets. The business plan is built on weddings. That's how you get the people to the resorts. Then you have a winery, you have a golf course, you have a hotel, you have restaurants on the property. So because they're there for the wedding, they enjoy all of the ancillary symbiotic cash flow revenue streams that the property has to offer. And that's been phenomenal. I cannot believe the success that we've had in the properties that we've been involved in over the past 20 months in the historic resort niche, where most of hospitality has been decimated. I mean, we cannot literally keep up. The one property, we're actually selling out a hotel in the same area because all of our rooms are constantly sold out. So we help them fill up their hotel too, because we're getting so much traffic to the property. So yeah. So, and then obviously there's a lot of other different niches. You've mentioned real estate and multifamily. I'm a big fan of multifamily and what's going on in that industry. And right now, I mean, it's a phenomenal place to be. And I think it's going to be a great space to be for another couple of years. As you know, there's always going to be a need for quality, affordable housing. Always.
Yeah, for sure. Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.